The Deutsche Bank X-Tracker EU is a Rand-based JSE-listed instrument which tracks the Dow Jones Euro STOXX 50 index. It reflects the strength of the euro and the underlying performance of the 50 largest, most liquid blue-chip stocks from countries within the eurozone, which excludes the United Kingdom. It has a market cap of 460 million rand and a dividend yield of 2.5%. Now, this is going to be for the brave-hearted out there, Viv. If you want exposure to the eurozone, perhaps this is the way to go.
Yes,
you get it in all its glory.
Yes, it is. Look, yes, Paul is right. There are issues here in terms of costing, etc. But a small retail investor, virtually wherever he goes to, there's going to be some kind of cost involved in what if he's trading out there. If you want to have some exposure to Europe, if you believe that, for instance, that the crisis is almost over, if you do think that there's going to be a rebound in Europe, it's fallen too much, the prices are too cheap, this is a good way to get into it. I'm not quite so sure about Europe at the moment. I do think there's still more issues to come in, especially the September vote by the Germans with regards to constitutionality of that ESM. But that being said, if you are looking at Europe, this is a good way to get into it.
And of course, we go to that Buffett quote, buy when others are fearful and sell when they are greedy. Right now, everyone's fearful about the Eurozone.
Yeah, I think the European version of that is like buy when the cannons are firing and there's blood in the streets or something. Look, I am very optimistic about Europe. The companies that form part of this index are big German companies like Siemens, like Deutsche Bank, like BASF, big French companies like EDF and the French banks. The Swiss are there, so you know, all these other kind of corporations. In fact, no, the Swiss are probably not there because they're out of the Eurozone. So, I mean, I'm not negative about those. I think those stocks have probably all been oversold. Again, though, my problem is that you're buying into something far away. You've got the management structure. If I was interested in direct European exposure, I would go and I would buy Bank of Santander in my, equities account in Europe or my equities account in the US, because all of these big stocks are typically traded on all exchanges.
But isn't it easier for the retail investor to go the ETN route?
Look, the retail investor is much stupider than you think. They are in fact buying like Alan Gray offshore unit trust funds, because they're paying 3% per annum, forget 1%. And they are paying some active fund manager to shuffle a few European stocks around. So I'm definitely not of the view that this is a worse option to what most people do. But the cleverest of them
Viv,
all.
that he's upset most of our audience this evening. Can we redeem ourselves in terms of exposure to Europe via an ETN being easier for a retail investor and more cost effective?
Oh, not just a retail investor, a lazy retail investor, let us say that, okay? A lazy retail investor is not going to take the time to go and analyze each individual like different European stocks, not know exactly what the exposure of Bank of Santander is to the European into Spain versus its exposure to other parts of the world. If you just think to yourself, I want to have a bit of diversification in my portfolio, a great way to have a diversified portfolio that has exposure to Europe is to buy this particular instrument. It takes out some of the brain power required to actually think about which stocks to actually weight your portfolio at. It takes out some of the higher costs through other instruments that we may be looking at. So this is a good way for a lazier, less, it's called hard-working investor.
We're lazy and we've got stupid. That's fantastic. Really, please keep watching the show.
Lazy, but if you were smart, and lazy, what you could do is buy Steinhoff shares, because that gives you your European exposure. And you don't have to pay anybody 1% per annum to hold them. And if Europe is fine and they're able to restructure their debts and they're able to sell lots of cheap furniture to lots of Europeans, then you'll do well there.
All right, but look, gentlemen, this does not look cheap to me. If I look at a typical share price graph, it's not where it was right at the beginning of this. Can you stand back a bit, Viv? Yeah. All right, no, not right off the
Well,
scale.
it's doing what you would expect a combination of the Rand, which has obviously had good months and bad months, and the European index. So in other words, understand it probably has more to do with the Rand than the Euro index, because Euro index is a fairly big multi-country market cap type thing. It's not going to move by such ragged amounts. But the Rand, we know, has moved from below 8 to the dollar. Wow, now you've got to talk Rand Euro. You've got to do that thing. So
Quick,
the Rand is a
Let's
risk
check
currency.
how smart you are.
Well, it's around
execution.
10. That's all you need to know about the Euro.
But do you want that exposure to the volatility of the Rand?
One of the things it has done is giving you a reasonable yield in a market that has been falling because the Rand has also fallen. So basically you have some money offshore, and when the benefits of having money offshore, if the Rand gets weaker, your money gets more valuable. So this is actually one of the benefits of having money effectively outside the country.
Yeah, that's a good point. The Euro dividends will be collected by Deutsche from all those companies, and then they will be paid to you on a 6 monthly basis. So that's where you get that sort of 2 point something or other yield that you mentioned earlier.
Hot or not on Euro DBX or DBX Euro 50, Paul Turan?
Not hot for me, thanks.
And Viv, hot or not,
If
DBX
you're
Euro
brave, it would
50?
be hot, but for the more conservative investor, not hot at the moment.
Not hot.